Welcome to Infinity Capital, everyone. This is Raj. Today we are going to analyze Bank of Baroda. So in my earlier videos, I have done Canara Bank, Federal Bank and Indian Bank. So this is one of the other PSU banks that I have in my portfolio, in the short-term portfolio. Multiple reasons why I'm looking at it. The first and important macro reason is that the economy is going decently well now, and we are doing approximately 7 to 8% of GDP growth right now. The forecast for FY23 and 24 are around the same levels. So going forward, growth should not be a problem. So if growth is going to happen in the economy, financials will do well, because without credit growth, without finance, an economy cannot go up. So also you have to also look at it from the other perspective, that financials make around 35% of the index. So if you see in the last 1.5 year, most stocks have gone up. Stocks without earnings have gone up, except financials. So financials have a big upside that can happen in them. So they have underperformed grossly. Chances are that they can perform much better. But we are not going to leave things on chance. We are try to analyze things based on what numbers are saying, and try and make a calculated bet. Okay. So Bank Baroda, 48,000 crore market cap. It is the fourth largest PSU bank. Okay, so if we come here, we'll know that. Just a second, guys. Right. So it's not mentioned here, but it's mentioned in the credit report. Just a second here. So Bank of Baroda, it got merged with Vijaya Bank and Dena Bank. Right. The merger came into effect in 2019. Right. So now they have roughly around 8,200 branches and 10,000 ATMs after the merger. 60% of these are in rural and semi-urban, right? And they have an international presence also, around 96 offices across 19 countries. So post-merger, BOB is the fourth largest PSB in Indian banking sector in terms of total business. Government of India holds 64% stake. Government was earlier holding, I think, around 70 to 71. They've diluted some stake. A QIP was done, I believe, and some marquee names have entered the the business. So branches increased from 5,500 to 9,500 in FY20 due to amalgamation of Vijaya and Dena Bank. All right. So the loan book is 46% is corporate, 21% is retail, agriculture is 15%, MSME 15%, and others is 3%. This 46% of corporate advances might do well, considering the fact that a lot of corporates, even the worst performing companies, have posted stellar profits, in the last 1.5 years. So this should help, companies deleverage. That in turn would help Bank Baroda make money. In the retail book, they have 66% home loans, which are secure loans. Auto loans 17%, and others, education loan is 5%. Others is 12%. International business accounts for nearly 15% of the total business. So it has achieved success in markets like East Africa. So they have around 101 overseas branches. These are the countries. All right. These are the JVs, BOB Financial Solutions. Okay. It was the first non-banking company in India to issue credit cards, BOB Capital Markets. Right. So they do everything related to capital markets, broking, investment banking, business valuation, mergers and acquisitions. Right. And probably they acquired this bank. Bank became a subsidiary in 1973. The Nainital Bank, Baroda Asset Management, so the mutual fund arm of the business. So AUM is around 11,000 crores. It's pretty small. India First Life Insurance. So youngest life insurance companies. right? So most banks are into life insurance. It's a sort of upselling that they can do. It's easy for them. All right. In India Infra Debt Limited, India's first infrastructure debt fund, right? So it's a fund that they have 41% stake. And here they are talking about the amalgamation. So in 2021, bank approved, allotment of 55 crore equity shares to eligible qualified institutional buyers. So they did a QIP at 81 and raised around 5,000 crores. So BNP, SBI Life, LIC, Nippon, these are some marquee names who got the shares of the company as a QIP, right? Bank is Baroda is trading way below its book value. That is something that is noteworthy. Stock PE is around 13. So if we look at the median PE of the stock is around 21. Stock is trading at a PE of 13. So on a trailing 12-month EPS of 7.64, if the stock gets re-rated, let's say it reaches a PE of 18, we can expect at least 137, 150 levels in this stock, right? So a good 50-60% upside can happen in this stock, right? So what are the other factors that made me look at the stock? So if we look at the March 2020 numbers, they recorded highest profits. Then March 2021, it's sort of there is a bit of a degrowth. However, their profits are coming at a higher clip. So if you see, as compared to March 19, they did 1,548 crores last year, 3,800 crores of profit this year, right? And we are going to also look at their NPAs. So this is another reason why I got interested, is because their NPAs on a quarter-on-quarter basis have gone down, and GNPA has also gone down, and NNPA has also gone down, right? So if these NPAs remain stable and the profits keep coming at a higher clip, we can expect a re-rating to happen in this stock. However, if there is any problem with the NPAs, then I will look for an exit in the stock. Overall, if you see March 19, they were doing an average of 16,000 to 18,000 crores of revenue per quarter. That has, from that, now they've reached 23,000 crores of revenue per quarter. And then in 2019, they were making losses. Some quarters came in at profit, so there was a lot of instability, a lot of issues. 2018-19 is also when the most banks were reeling from the IL&FS issue, the NBFC crisis, right? So a lot of restructuring was going on, right? So deleveraging. So because of that, these problems were there. But if we see from the last at least 5-6 quarters, profits are coming at very higher clip, 1,700 crores, 1,200 crores, 1,200 crores, 2,200 crores. This is probably the highest quarter in a pretty long time. So these are the reasons which led me to pick Bank Baroda. Also, why I'm looking at PSU banks right now for a short trade is because the big banks, they're pretty big. So for them to move, for, let's say, for a bank like ICICI Bank, from a short-term trading perspective, it's a 5 lakh crore market cap stock. So for it to move 20%, the market cap has to go up by 1 lakh crores. For that to happen, something significant has to happen in the bank, in the financials, or if multiple re-ratings are happening in the bank. So and then we can expect some move, 20% move in ICICI Bank, and that also will not happen very quickly. It's going to take some time. However, in the small banks, it becomes easier because if any marquee investors takes a 2-3%, 5% position, it is easy for the stock to go up, right? Because obviously there are no sellers, then people are buying, It's a demand supply thing. It's pretty simple. So it's easy to make money in smaller small cap banks with smaller market caps, right? uh, so let's look at the credit rating report very quickly. This is something that I read always. So their total amount, considering all their bonds, is roughly around 5,775 crores. The rating is pretty good, stable, right? And here the strength is basically, obviously it is backed by the government. Can infuse some capital if needed, and they have an improved capital position because they raised capital, so that can be used for growth. Since the economy is doing well, banks need money to do business. That's their lifeline. So they need money to do business. If they are able to manage their NPAs and they can record decent growth, we can expect good profits to come into the banks. Another thing to remember is that, guys, banks have made heavy provisioning last year, and some of those provisions will be released because considering the fact that the economy is back on track, at a large level. So some of the provisions will be released that will basically be added back to the kitty, and then that can be used as growth capital. So these things, it will basically, everything will happen together. Profits will come in, provisions will get released. So these things can happen. We'll see, suddenly we'll see too much profits happening in these banks, right? So well-developed deposit franchise. So they have a very low cost interest bearing, so at 3.5%. So the cost of the fund is very, very low, so this is a very good thing for them. Having 3.5% cost of funds is excellent, right? So what are the credit challenges? So asset quality remains monitorable, which means that we have to monitor the asset quality. The GNPAs are still at pretty higher levels, so this should not deteriorate further. If this remains stable, that is good, and if this remains stable, that is good, because these government banks have gone through so much pain. The restructuring and the deleveraging is not going to happen within a year or two. It's going to take more time. So what I would like to look at is GNPAs and NNPAs not rising, and if the revenues and profits are coming at a higher clip, I will continue to hold the stock. Okay, let's do a technical analysis on this stock. So if you look on the left, if you'll see, the blue line is the 200-day moving average, which is trending upwards. The 50-day moving average is also trending upwards, right? The stock basically has been trading in this range. This is the range. This is pretty much the range in which the stock has been trading in, 66 and 100, right? Now if you notice that this stock was basically trading in this range between 90 and 130, okay? Post that, the stock broke down. So this was during the COVID crash. So from this range, the stock went down by 60%. So there are a lot of people who are stuck here, and these people have felt the pain because the stock crashed by 60%. They thought that they bought it cheaper, but it became more cheaper. So this is the area where we will see continuous selling coming in. If you see, stock reached here, came back. Stock reached here, selling came in, right? However, if you see, the selling here was pretty high, on very high volumes. However, the subsequent selling now is on lower volumes, which means the selling is subsiding, and that is a good sign technically, right? Now what is the entry point? So this is the range where I have accumulated the stock. Just a second, guys. This is the range. So I was buying between 82 and 92. This is the range where I have been buying. So I have not finished buying my full position. So I have made 2/3 of my purchase. I am waiting for possibly a small mild correction and then I will add to my full position. Also, if you notice, the stock is still trading within this range. However, it is trending upwards. So this correction happened because currently the mid cap small cap index corrected significantly. That is why this stock also came down. However, it is recovering and going up. So my guess is it will still consolidate here for some time, for at least 1 or 2 quarters before going up. So I will have ample time to add to my position. Plus December is a seasonal month, so I'll get opportunity in Jan to add, right? And then we have a couple of big events. In Feb we will have the budget. March we have the yearly closing, financial end. So we have a couple of big events happening, so we'll watch out for that also. So what sort of targets? So buying around 90, looking to basically exit anywhere between 130 and 160, 140 and 160. So if you see why that level, so if you see, the stock was locked into in this range for quite a long time. Sort of broke down here but came back in. So this is a range, another range that it has to break before sort of before starting a new upward trajectory. So what am I looking at is basically, once these levels are crossed, once this level is crossed, this will be the level to break, 130 and 160. This will be the level to look out for. So overall I'm looking to basically exit my position around 160, 170 whenever that happens, right? So this was the analysis on Bank Baroda. Remember guys, this is an educational video, it's not a buy sell recommendation. Thanks a lot for watching.